Alright, welcome back to the simulated game of life. We have had an adventurous year, and so I have my job as an electrical engineer. I needed some help along the way, and I will probably continue to need help. And I will keep track of any help I need or any other miscellaneous expenses from my teacher on this page. Some prices. Teachers will charge you $3,000. Going to the bathroom is $100, or any kind of activity in the hall. I consolidated my debt, and I'm still paying on that. I've only been through 1 year. 60 months is 5 years, so I've only been through 1 year. All right, and the budget, I created my budget, and I answer these 2 questions on the bottom. I made my decisions. I may have to adjust them for my year 2. My year 1 turned out really well. I've got $25,756.84 in my savings. I need to make sure that my savings is updated here with $25,000. And it's a pretty, let me start with a different colored pen. $25,756.84. Okay, so there's my new amount. It's written in purple, even though you can't tell. Okay, so now let's see what I have to do. So before you can even begin your year 2. So I finished my year 1. I'm caught up. I've got my savings updated. Everything is beautiful. My budget balanced. So I'm going to begin year 2. Now the thing with year 2 is, if you notice up here in the corner, it says staple update here. So I had to go to my teacher, and I had to get an update. So the updates are also random, just like the jobs. And it tells you things that you need to do to change your life. And I need to kind of work through a new budget and make some new choices if that happens. So my major updates, it says from teacher. So I've gotten married. So now I'm married, so I'm going to mark married. And it says, go find your spouse. You need to get your finances in order. If you and your spouse both get this update, then you've gotten divorced. So this is my initial update. So I would need to go find somebody in my class to be my husband, or you can just kind of work through your year. You don't have to go find a spouse. However, if you do go find a spouse, pretend like I pick Steve to be my spouse. If Steve and I both get this same update again later, that means we'd both be getting divorced. That's neither here nor there. Let's just stick with what we got. I got married. I'm going to have to adjust my finances. My wedding cost $15,000, so that's a surprise. So I'm going to have to take that out of my savings. And the nice thing is, though, is that I got a raise. So I get an extra $2,000 a year. So that is going to change my budget. So I may have to kind of recalculate a lot of things. So my gross annual income was $61,090. So I need to go back to that. And right here I'm going to write $61,090. Now I got an extra $2,000 a year. Doesn't pay for my wedding, but I got an extra $2,000 a year. So I actually am going to make $63,090. My family size was 1, and I got married, so my family size is now 2. Now, what I had in my savings, if I remember, was about $25,000. So mine is $25,756. $25,756.84. Yep, and 84 cents. But I got married, so I have to take $15,000 away from that. So that's going to leave me with $10,756.84 in my savings account. So the number I just wrote down Doesn't match. Okay, so I took away my $15,000, so I'm going to put my update up here in this corner using tape or a stapler. Doesn't really matter. I just don't want to lose it, and I need to maintain integrity. Plus, in case I forget what these numbers are, what these updates were, you wouldn't want that to happen, would you? So I'm going to fold this. So there's my year 2 updates. I got married in debt. So now I have a choice here. I don't have any new debt. So I can keep going with my consolidated debt. So I had this beautiful plan. It was 60 months. I've already paid a year of it. So let's figure out how much debt I had at the end of the year. So my debt was $28,050. Let me pull up my phone. So my debt was $28,050, and I paid $510.33, and I pay that over 12 months. So I'm going to keep with my current debt. I'm not going to reconsolidate my debt. So what can happen here is I've already paid this much, so this is what my current debt is. I can stay on my current plan, nothing would change. Or if something happened and I needed to reconsolidate my debt, or I needed to add some debt to it, I would have to do this entire page over again with my new debt number. So hopefully you don't have any new debt. So my debt at the end of last year was $21,926.04. I don't have any changes in my debt, so I haven't had it upped, because if I had it upped, you would have to redo this page. So I will probably have some extra pages available, or you can just do this on an extra sheet of paper. But if you have new debt, so if I did not have the money in my savings to pay for my wedding, it would have gotten added to my debt. So anytime if a teacher charges you $3,000 to go for help and you don't have it, you can add it to your debt. But once you add it to your debt, you need to redo this entire page to reconsolidate your debt. So going into debt is quite difficult. But I'm not going to change anything, so my year 2 amount is the same, $21,926.04. And I'm going to keep my plan. So my year 2 income is $63,090. Whew, my tax rate. So it doesn't, for the single, it doesn't take me out of that bracket. Now the question is that I need a spouse. Because whatever I make as my spouse, that's the percentage I would get taxed at. Alright, so this is what we've got. This is our tax rate. Before, I was here at 28%, but that's because I was single. When you are a family, you can file jointly. I'm at $63,000. I'm now going to get taxed at 18%. So I have more expenses, so I'm going to get taxed less. So this is jointly, as a family. Even if I'm only using my income, that's my new tax rate. If I was single, I'd be taxed up here at 28%. But I got a raise, I get taxed less, things are looking pretty good. So I'm at, what, 18%? So I'm going to come back here and do 18%. So I need to calculate my taxes. Okay, so it's $11,365.20. So let's calculate my new income minus my taxes. So I'm going to make $51,724.80. Get my monthly by dividing it by 12. I don't want to do that. I want to hit enter, then I want to divide by 12, because what I had originally done, it was going to take my taxes and divide it by 12, not the difference. So to maintain my order of operations, I had to hit enter. So this is my net, divide my net by 12. So I'm actually making a little bit more per month, so that's good. Now I get to go through my projected. So if you remember, it looks a little different than it did in year 1. So it looks a little different than it did in year 1 for your budget, because they laid everything out for you to kind of show you everything in one big sheet. Now it's a little more condensed. So they're assuming you kind of understand this page, and I'm going to go through and create what I think I'm going to spend. So I'm going to keep all of my percentages the same, just for ease. So housing is going to be 30%, groceries 20%, transportation 15%, debt 15%, savings 10%, extras 10%. I do not have any children, so I do not need to have any child care. If you have children, you're going to have to work in a certain percent for child care. And you might not know what that is. If I had to guess what percent of my income I spend on child care, hang on. Okay, if you have a child, I would probably budget about 10% for child care. So if you're budgeting 10% for child care, that means you need to take some percentages away from housing and groceries and debt and savings, because child care is about 10%. It's about 10%. So I'm going to calculate all these again. So 0.3, 0.2, 0.15. So if you know how to do this, feel free to pause the video, do your own calculations, because this is exactly the same as Budget Busters. It's exactly the same as what you did in year 1. Now it's just different numbers. So I'm going to take it and multiply it by 0.3. So I get about 1293.12 times 20%, $862.08, 0.15%, so $646.56. I'm going to do the same amount for the next one. 10% is just going to be $431.04. $431.04. Now I want to make sure that these add up. So I'm going to sum all this to make sure I'm not going over my budget. Oh. 862.08 plus 646.56. $431.04. $4,310.40. I match perfectly with my net monthly income, so I am in the clear. So my proposed budget is ready. Now I get to go through my choices and see if they still apply. So I'm going to rewrite my projected information here, just so as I flip back and forth, it's a little easier. So 1293.12. Groceries, $862.08. Savings is for, I don't have any child care. Alright, so let's do this. Let's go look at my choices and see what I can do. So I'm going to keep my home, $1,000 a month. I think it's a good choice, so I'm going to keep my housing at $1,000. So I'm going to rewrite that price right there. I don't have any kids, so my Ford Focus, I think my Ford Focus is going to be fine. So I'm going to keep my $323 for 60 months. That's 323 is down here for transportation. Groceries. I am now a family of 2 with 2 adults. So if you notice, that jumped up significantly. So I now have to spend $605 on groceries. My debts, I'm going to keep my debt. So I need to go back and figure out my payment. It was $510.33. I'm going to say that I don't have any child care extra. So let's go look at the extra. My phone, that's an extra. There's not a place for your phone on here, huh? Yeah, I guess my phone goes under an extra. So I've got $120 for my phone. I'm going to write that down. And I got to pick 3 more here. So my goal was to start a Roth for my retirement, and I think I'm going to do it. So this is not a monthly expense. This is a yearly expense. So I am going to deduct $5,500 from my savings. That's one of my goals. I don't have any child care. However, I'm going to keep my internet, I'm going to keep my pet, I'm going to keep my clothing. I have a spouse, so I'm going to want to go on dates. You've got to nurture that relationship, so we're going to go on dates. And that's $75 a date. So assuming I would do 1 date per month, that would be $75. So pay attention to that, because you want to be careful, because if you go out every weekend, that's actually more than $75. So I don't have any kids, so I'm going to want to go out twice a month. So 2 times per month. So I'm going to go out, that's going to be $150. So I have to start adding all this up. And now since I have a car, I'm getting older, I don't want to be risky anymore, so I think I'm going to buy some AAA. Just because if I do get stuck somewhere and I do need to get my tire changed, I'm going to buy some security. So let's see what I'm spending on my extras. So I have $120 for my cell phone. I wonder if I forgot that in my year 1. And then I have $50 for internet, $30 for AAA, $40 for my pet dog Dexter. I'm going to go on 2 dates, so that's $150 a month, and I'm still going to spend $50 on clothes. So I'm going to spend $440 a month on extras. So I need to go to my year 2 and write down my $440 per month. So let's see. So I need to figure out how much I'm going to put in my savings. So my net monthly income is that $4,310.40. Subtract my housing, subtract my groceries, my transportation, my debt, and my extras. So that looks pretty good. I still have $14,000 left over, or $1,400 left over. That's a lot more than I expected. Let's try to calculate again. They should add up to be $4,310.40. So I'm going to double check this, because that does seem like a lot. 60, which is okay though, because I really want that Roth. It's really important that as I build myself a life, that I save for when I'm older, because I don't know what the retirement system is going to look like in 30 years. Yeah, that worked out perfectly. So I've got a good chunk going into savings. So remember, my difference is projected minus the actual. So I know if I'm coming out ahead or not. So 1293.12 minus 1,000. So I am actually ahead $293.12 on my mortgage or on my housing. I'm ahead $257.08 on my groceries. So that's good. I was a little nervous about that 605. And I had $323 on my transportation. Now I have more money for debt. In an ideal world, what you might want to do, if you're ahead $136.23 for your debt, you would probably want to put that towards your payments so you can pay your debt off quicker. If you pay more than what the payment is, this extra money would go directly towards that balance, that principal balance, and that means the next time they calculate interest, it would actually be less interest. And so I would get paid off, my loan would get paid off quicker if I paid more. But for simplicity's sake in this project, I'm going to leave it as the $510 payment. I'm not going to go over. My savings, it's going to look like I'm behind, but I'm actually doing really well. Because being negative in my savings means that I'm putting in a lot more than I was originally planning. And I don't have a child, so that's working out for me so far. I get to have all these beautiful extras, because honestly on my extras, I went over on my extras. I went over $8.96, so I'm spending more than the 10% that I thought I would spend just to kind of have fun and do all those extra things. And if you noticed, those extras, there's still a lot of things I don't even have. Like I don't even have a TV. I don't ever buy coffee. I don't have any habits like smoking. So I'm actually living a pretty simple life still because those extras add up. But I'm going to sum my differences. I'm going to sum my projected. I know my projected adds up to be my net. I know those subtract to be 0, so I need to sum all my differences to make sure I'm even. So all of these are positive, 136.23. I'm subtracting this because I'm actually a little over on my savings, which is a good thing. I'm over on my extras, and I'm at 0. So I'm perfectly balanced. But while I was doing all this, so let's think about the things I need to take out of my savings. So my savings changed because I had that wedding, right? So my savings is actually 10, so let me minus my 15. So I got married, minus 15, so that I'm at 10,756.84, right? I wanted to get an IRA, so I am going to do the IRA. Now there is a max that you can contribute to your IRA. It's between $5,000 and $6,000. I think it depends if it's a Roth or not, but either way, there is a maximum, and you cannot get this money back. So if you put the money into the IRA, you cannot get it back without getting a penalty. And so this is just money. It's an investment. It grows. It's meant to sit there until I'm ready to retire. Nothing else. So this is $5,000. Is it 5,000 in this, or is it 55? I think it's 55 if I go back to that page. So it is a lot of flipping right there for a Roth IRA. So I'm going to take off $5,500. So that puts me at 5,000. So my savings is decreasing. Luckily, I have a good amount to put in. So I'm at 5,000 after the Roth IRA. And if you also notice, I don't have any of these other things, but I did get married. So I'm going to say I should have an engagement ring, year 2. because I did get married. So we'll call engagement ring a wedding ring. We did go on dates. Most people like to go on vacation, right? So I'm going to try really hard to be very practical about this and not just live without anything. I'm going to think about things I really want to do so I can get an idea of how much it would actually cost me. Having some living room furniture would be nice. I know you can get things for free off like Facebook Marketplace or Craigslist, but buying some living room furniture would be nice. Let's say I would want to go to Disney. So I'm going to go on Disney. We're going to go on our vacation for year 2. So I'm going to get an engagement ring, which is $3,000. So let me go back to my savings. Or a wedding ring. I'm going to call it a wedding ring. And then I said Disney. How much does Disney cost? $1,700 per person. So it's $1,700 per person. I'm technically a married couple, so I'm going to charge myself $3,400 because it's per person. And I don't know what my spouse's situation is like, but I'm going to pay for it. So let's... So $5,256.84. Now this is where I'm going to run into some issues because I'm technically a little bit negative right now. I'm not too worried because I am saving each month during year 2. So this will get wiped out. But I just need to be careful because engagement rings and vacations, they eat up your savings. So right now this is my savings. I'm at negative $11.43. And I did all this because at year 2, so I consolidated at the beginning of year 2, so I don't need to consolidate again right now. So if my savings during the year balances this out over here where I'm negative, then I'm going to be okay. So my year 2 annual savings, so the amount in savings previously right here, I don't even know if let's think, did I need any help? So maybe I didn't know what to do with a spouse, and where's that chart? Oh, right here. Okay, common expenses. So I didn't need help from the teacher, but I did need to go to the bathroom. I did need a pencil. So let's write pencil, restroom. Let's pretend like I forgot my calculator and Miss Lister had to let me borrow a calculator. She charged me $400 for that. So that's 400, 400, 100, so that's another 900. This is looking rough. And so there I am below I'm negative 900. I didn't need to consolidate my debt, so I didn't need scrap paper. Nobody's arrested me yet. I don't know if anyone's gotten arrested. And I figured it out on my own. It took me a couple days. One of those days I had to use the restroom. But that's okay. So I'm negative 2,043. So right here, I am negative 2,043.16. Now my annual savings, so I'm saving a good amount, so I might be a little bit okay here, because I'm saving $1,400 a month. $1,432.07 times 12. So I'm actually going to hopefully save $17,184.84. I'm going to subtract the amount that I'm negative in my savings account from my vacations and my wedding and my IRA. So that leaves me with $15,141.68 in my savings at the end of year 2. So now you can go through and answer these 3 questions. That is my savings for year 2. I may need to be careful because I got to get to year 5 and I'm already running out of space on my savings account, so I may have to condense how I'm writing it. That's okay. And that's the end of year 2, because year 3 I'll get another update, and I'll do this all over again. Thanks for watching.